Friday, August 9th, 2019, Maneco 64, home of alternative economics and contrarian views. My last day in Switzerland today. My wife and I are going to be flying out this evening. We need to drive to Geneva. My sister's going to drive us this afternoon. It's a couple of hour drive, 2-hour drive from here to Geneva. So markets, what I've seen the last few days is that stocks have rebounded a little bit. Interest rates have backed up. The 10-year yield has gone up. So today I'm going to look at some of the charts, like the Dow Gold ratio and the Gold Silver ratio. I think what we're seeing now is a little bit of consolidation in the markets, a little bit of volatility, but I expect the precious metals to continue outperforming paper assets, and that doesn't mean paper assets are going to go down, but I think precious metals are going to do better in relative terms, and that's how you kind of balance things out. As I've said in the past, it's just past 8 a.m. here in Switzerland, 8:11. We are 6 hours ahead of Eastern time in the US. So we've got spot gold right now at 1507. That's just up over $6 or 0.4%. The high has been 1509. So the other day, the high was around 1510, 1511. That seems to be the resistance at the moment. Low has been 1499 overnight. Silver has rebounded. Silver didn't have a great day yesterday, kind of a breather. As I've said many times in the past, markets never go up in a straight line or never go down in a straight line. Silver right now is up 15 cents, just under 1% at 1708. Range has been 1689 to 1715. The Dow future is down 83 or 1/3% at 26295. S&P down 11, just over 1/3 at 2928. Nasdaq 100 futures down 40 or 0.5%. The fiat currencies, sterling is up slightly, not much, 121.41, kind of stabilized at the moment. Euro is up 0.1%, 111.95. Dollar is down 0.2%. Now with a 105 handle against the yen at 105.87. So dollar is quite weak against the yen. That has been in the past few years positive for gold. Dollar yuan unchanged, 707. Crude oil, we've got WTI unchanged at 52.52. Brent 57.29. That's unchanged as well. Bond market, the 10-year yield now is back just below 170, down about 2 basis points. 3-month is at 201. That's actually down 1 basis point. So the curve still inverted around 31 basis points. So now I want to look at some of the charts here. First one is the long-term Dow Gold ratio. Going back to 1980, you can see that the Dow Gold ratio topped in 1999, just before the dot-com bubble burst. I think gold was around 250, the Dow was around 11, so we almost got up to 45. And we've been in a cyclical bear market, I would say, in real money since then. Yes, we've had the counter-trend rally since 2011, but I think we topped now last year at 22.5, this Dow Gold ratio. This is the amount of ounces you need to buy one Dow. I think we're going to go back down and retest parity. We could go 1-to-1, in my opinion. Could go even lower, which would mean you would get more than one Dow for 1 ounce of gold. This is the longer term chart. Show you shorter term chart here, which I've shown you before. There's this head and shoulder I spoke about it when we were at 18, and I said we could go and test the neckline, and we did. Actually, and he held right on the neckline, around 16 and a half. Right now, we're above 17. It's difficult to say when that's going to break down, but in my opinion, it's pointing towards more outperformance from the precious metals. And what that will mean is that tangible assets, real wealth, will rebalance versus paper assets, because the bubble we've had since the collapse of '08, and when the central bankers and the governments threw everything at the system to keep it going, has created probably the biggest paper bubble, credit bubble ever in the history of mankind. And the way to balance that is for those assets to rebalance versus tangible assets versus real things, as I've said in the past. And now the gold-silver ratio, which I've said in the past, silver needs to outperform in a bull market, precious metals bull market, and it looks like we're starting to do that. We went to elevated levels for that ratio, above 93, levels we hadn't seen since the early 90s, and you've seen here the collapse here of that ratio, which is a good thing. And right now we're seeing a counter trend rally, but I think that's going to keep going lower. How long it will consolidate here, it's difficult to say, but not that long. I think we're very close to a next leg down, which will mean silver will outperform gold. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.